you get very rich, and you won't have to be very bright. I mean, I'm sure.
I mentioned this on another video about Warren, that he could tell you all the rules, but you don't have the psychology in order to be successful like he does, because you can't think like Warren does. You can try, but it's only when you grasp the concept of like, I'm going to buy and hold this forever, not that I'm going to buy and hold it, but when it goes down to 5 from 100, then I'll finally get out. No, you got to get out. Like if it's going from 100 to 5, you got to get out like 98.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have a special lesson for you. I'm putting it here on the podcast because I really believe that this is going to provide you massive, massive value. And that's what I'm trying to do here. And hey, listen, if this podcast was useful to you at all, I really highly suggest that you go check out the full trading course at AIStockTradingSystem.com. That's AIStockTradingSystem.com. Markets are people. People are predictable. Outlier can show you how to track market fear and greed with artificial intelligence on over 1,300 of the largest market cap names. Visit outlier.com to learn more. That's OVTLYR.com. They have a free pilot program for the rest of 2021, so you can get access to right now at OVTLYR.com. That's OVTLYR.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have the man himself back on the phone. Well, not really. We're doing a commentary video, which makes it fair use on YouTube, so we can do it. But we're talking about Warren Buffett today. We've had him on the show a couple times now. I don't think I'll ever actually get him on the show for real, but we can definitely talk about the speeches he's made. On this one, it's called Warren Buffett, How Long Can Stocks Stay Overvalued? Now, you know, when markets are running at all-time highs, there's a lot of bears out there who say stocks have to come down, stocks have to come down, stocks have to come down, but really they don't have to. I'm curious to see what Warren says here, because what's the old fable? The market can stay irrational longer than you can stay insolvent. Yeah. I've definitely learned that the hard way. But let's see what old Uncle Warren has to say.
In very human ways, which is they get very excited during bull markets, and they look in the rearview mirror and they say, I made money last year, I'm going to make more money this year, so this time I'll borrow, you know, or the neighbor says, you know, I wasn't in last year when that neighbor was dumber than I made a lot of money, so I'm going to go in this year. So they're always looking in the rearview mirror. And when they look in the rearview mirror and they see a lot of money having been made in the last few years, they plow in and they just push and push and push on prices. And when they look in the rearview mirror and they see no money having been made, they just say this is a lousy place to be. So they don't care what's going on.
Warren just described what a trend is. Stupid efficient market hypothesis would say that this doesn't exist. But he's saying, hey, look, you see your neighbors making money. You made money last year. That's the trend. That's literally a trend. I'm glad he described that. Thank you, sir.
In the underlying business. And it's astounding. But that makes for a huge opportunity. Just huge opportunity. I mean, I lived through roughly half, in an investing sense, about half that period. And I've had that long period of stagnation from 65 to 82, 17 years. I wrote an article for Forbes in 1979. I just said, how can this be? Pension funds in 1970 put 100 and some % of their new money in stock because they were wild about stocks. Then they got a lot cheaper, and they put a record low in, 9% of their net new money in 1978 when stocks were way cheaper.
Well, so, I mean, that's the difference in a trader and an investor, right? An investor wants to buy low, sell high, but a trader wants to buy high, sell higher. So, yeah, that's just my personal opinion.
People behave very peculiarly in terms of the reaction.
And it really depends on the market scenario, right? He's saying when the stocks were at lows, they weren't putting new money in, which kind of, in my opinion, was smart, because when stocks are at lows, let's say they're going down, right? I'm not buying anything when the price is going down, but when it reaches a bottom and it starts to turn around, it starts to come back up, that's when you get in. That's when you have the best risk return here, right? When it's, let's say a stock's gone from 100 to 5. I'm not buying anywhere from 105 on its way down. But if it goes from 5 to 100, you can buy anywhere on the way up. 10, 20, 30, 40. And when it still reaches 100, all of those gains are going to be winners. So buying it at its lows and then starting to turn around, that's at the bottom of the crest of the it's not the crest, it'd be like the opposite of the crest. The bottom of the wave, that's the best return relationship there. Because you don't have far for it to go down in order to get out, but you could ride it from 5 to 100 on the way up.
Actions, because they're human beings, and they get excited when others get excited. They get greedy when others get greedy. They get fearful when others get fearful, and they'll continue to do so. And you will see things you won't believe in your lifetime, and securities markets. And the country will do very well over time, but you will see these huge waves. And if you can stay objective throughout that, if you can detach yourself temperamentally from the crowd, you get very rich, and you won't have to be very bright. I mean, I'm sure.
I mentioned this on another video about Warren, that he could tell you all the rules, but you don't have the psychology in order to be successful like he does, because you can't think like Warren does. You can try, but it's only when you grasp the concept of like, I'm going to buy and hold this forever, not that I'm going to buy and hold it, but when it goes down to 5 from 100, then I'll finally get out. No, you got to get out. Like if it's going from 100 to 5, you got to get out like 98. Yeah, that's
Sure you are, but it doesn't take brains. It takes temperament. It takes the ability to sit there and look at something. When I started out in 1950, I would go through and find things at 2 times earnings, and they were perfectly decent businesses, and people wanted jobs at those companies, and everybody knew they were going to be around, and they wouldn't buy them at 2 times earnings, and that's when interest rates were 2.5%. I started selling securities when I was 21, and a Kansas City life insurance company happened to be a fairly prominent company in Omaha, and the policies they sold you, if you were buying life insurance from them, had a built-in assumption of 2% interest. The stock of Kansas City Life was selling at less than 3 times earnings. You were getting 35% if you bought the stock. No question about the soundness of the company. I went to the local agent. I figured, hell, I ought to be able to sell him a few shares of stock. I mean, the guy ought to understand it. He's got his whole life invested in this company. I went to the local agent who'd been with him for 20 years. And his name was Moose. I said, Mr. Moose, I said, you're selling these policies with 2%. You may even have a few members of your own family, and you can buy into this company whose paycheck you depend on every month, and whose future your beneficiaries of these life policies depend on, and who you're selling them, a 2% investment on, and you get 35% on your money. He said, stocks aren't any good, and I couldn't sell the, I was a lousy salesman. I mean, well, you have to start with that, but it just blew me away. It blew me away. I thought sometimes I used to wonder if I was nuts, but those things, the same thing happened. I mean, in 1964, the Dow closed at 864. At the end of 1981, 17 years later, it closed at 865. It moved 1 point in 17 years. Now, that's not a big move. And that, you can't believe how discouraged people were during that period. People were living better. So things can go on a long time that don't make sense. But they do come to an end. I mean, the internet thing. I mean, you had these companies.
To the point of the video, Warren is saying, how long can stocks stay overvalued? He just said it can go on a long time. Not that the, what was it, 1967 to 84, whatever that range was when it only moved 1 point. Not that that was overvalued, but the market can do crazy stuff for a long time, is what he's saying.
Companies selling for many billions of dollars that had practically no prospects of making any money. That's a bubble. But Herb Stein one time said, anything that can't go on forever will end. Now, that's pretty, but think about that, and particularly think about it next time you're trying to do something just because the stock's gone up a whole lot, and your neighbor's made money or something. You've got to be, you just have to sit and think objectively and think about, would I buy this whole business? If it's an internet company that's got 100 million shares out and selling at 100, that's $10 billion. Is it worth $10 billion? If it's worth $10 billion, it's got to be able to give you, 700 or 800 million next year. And if it doesn't give you 700 or 800 million next year, it has to give you maybe 10% more than that the year after and continue to. There aren't a lot of
He's talking about business valuations here, and translating that to the price of
businesses that can do that. And people just go crazy.
People go crazy. And people go crazy wondering how long can stocks stay overvalued. And that was Warren's point here, is that if a trend is continuing on, it can continue on. As he said, people go crazy for potentially a long time. So yeah, that was super interesting there. I really enjoy listening to these speeches from the greatest investors ever, and I hope you do as well. Make sure you smash the like button if you did, and share it with someone that needs to hear it as well. And subscribe. That way you never miss any of the tools, tips, and tricks that we upload every single week to help you trade faster and trade smarter. I'll see you on the next episode.
Okay, so what'd you think? That was pretty incredible, right? Now, if you like that, that's only a taste, only a sample of what you're going to find in the full AI stock trading system. And I really highly encourage you to go and check this out. Obviously, you are interested in learning on how to trade, and that's why you're listening to this podcast. Now, I'm going to take and download my entire trading system that I use day in and day out onto you. And the only way I'm going to be able to do that is over at the AIStockTradingSystem.com. You're going to get phase 1, 2, and 3, several bonuses, and on top of that, I'm going to walk you through over a dozen trades that I put on inside of my account, holding your hand and showing you exactly how I got in, how I got out, how I use the artificial intelligence data, and how this could work inside of your own trading portfolio on a daily basis. So make sure you head on over to AIStockTradingSystem.com. That's AIStockTradingSystem.com to learn more and to get started and to download my decade plus worth of trading experience into your hands so you can start using the AI stock trading system today, the 5-step system to take the guesswork out of trading. Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.